this Bitcoin slang down. Check it, a Bitcoin is a currency, blockchain is technology, transactions take place on it constantly. A public key is your address, private key is your access, cash is trash, but a Bitcoin is an asset. And stacking sats is like accumulating gold, a market order sold, the hodl is the hold. A confirmation is that the transaction is back, with verification intact, with minus proof of work. A bankster is a crook, amateur traders get shook. Look, the white paper is the book. And if the price is low, you bought high and got stuck. So what's luck? Cause if you got hacked, that means you got fucked. And Bcash is a clone, open source is the code. A computer running software is a node. I know you like the way I break it down, so let's take a moment to ponder. How does $1 million Bitcoin sound? Ain't nothing funny, don't nothing move but the money. Stop, stand and be still. Don't nothing move but the money. Credit is debt, speculation is a bet. Bitcoin, a native currency for the internet. To panic sellers to sweat. A note is a check, and to Moon is for the price to move 100x. See, Peter Schiff is a hater, Roger Ver is a trader. Also whales are big players and manipulators. To leverage is to add margin to your trade, and if the market moves against you, then you're absolutely slayed. I see bubbles, they pop, it's volatile a lot. To predict the price going up, that's just climbing the top. Not many systems are credible. A Satoshi is 1/100 millionth of a Bitcoin decimal. Your wallet functions exactly like a bank clerk, and hash rate is the power of the network. I know you like the way I break it down, so let's take a moment to ponder. How does $1 million Bitcoin sound? Ain't nothing funny, don't nothing move but the money. Stop, stand and be still. Don't nothing move but the money. The crypto holdings is your bag. To boast about your gangsters to brag. An address name is a tag. Scammers are shills, no coiners hold bills. To execute a trade means your order got filled. Also dApps are decentralized apps. Capital gains means tax, some buy signals are traps. To discourse is to talk, but a lack of consensus means that when a blockchain splits it's a four. A halvening's an event where the block reward the miners get is cut by 50%. Participation builds a network effect, but if you lost a large amount, then that means you got wrecked. A low price is a dip, Lambos are whips, and Bitcoin improvement proposals are bits. I know you like the way I break it down, so let's take a moment to ponder. How does $1 million Bitcoin sound? Ain't nothing funny, don't nothing move but the money. Stop, stand and be still. Don't nothing move but the money.
Securing data is useful. Securing
what data are you securing?
Any data that you would
What
want.
data are you securing?
Financial data, mortgage data.
But on your one,
data,
if I have one,
my birth certificate, my
No.
personal data, my verification of
But
who
you
I
don't
am.
need-
So I don't need Equifax
But you
to
don't
sell
need-
my data
and
lose my data and fuck my data.
and
I
you
can have
don't
my
need
data
Bitcoin
on a private
either.
key and say this is me. It's immutable. It's every 10
Yes,
minutes. It's
but
verified. And that's who I
Max,
am. Give me my fucking
Max,
money.
You don't need Bitcoin either.
Yes, you do, because it's the most secure. It's the only secure database that's ever been invented.
No,
That's the technology. You fail to understand that it's a new technology that is as profound as the printing press or the electric light bulb. You're comparing it to things that you shouldn't be comparing it to. It makes no sense. You're talking nonsense.
Yeah, this is.
Okay?
Look,
It's a brand new breakthrough in technology.
this is
Your
like-
kids are going to be wondering why their dad didn't see the value. They'll be
this
like,
is-
Dad must have been on drugs because he never saw the value.
Welcome Bitcoin friends, it's Bitcoin Ramo. Today we're going to look at the Bitcoin price, going to look at some charts and do a bit of technical analysis, do some price predictions and just where we think Bitcoin's going to go in the coming weeks. So we have had a big run up here since the crash. We've had a big run up, but just recently, since about October 8th, we've had this big run up here where we've gone all the way up from 10.5 up to around 13,000. So this is just the bigger picture with Bitcoin, as we peaked out here at 20,000. And this is the line chart, so it just shows the bodies of the candles, not the wicks. So it's just another way to look at it. And just doing a fib retracement all the way from the peak at 20,000 down to the low at 3.3. We can see that with the bodies of the candles on this line chart, we are currently in this golden pocket zone, which is quite a powerful zone, and it's going to be a tough zone to get through. So I think we might have a bit of a pullback here. And just looking at the RSI, we've just got these arrows placed. We do have this trend line here going up on the RSI, catching the tops. and it corresponds with these arrows on the charts, also catching the tops on the charts. So currently we do have a bit of room here to get to the top of this trend line, so perhaps we could have one more push up, and we don't know how high that might go. We are currently sort of on this level here with the previous tops back in June of last year, so there will be some resistance here. So on to the next chart. I've just got some lines drawn on here. This is the same. This is the peak back here in July, where we got up to 14,000. So ever since this crash back in March, you can see we've been in this channel where we've bounced off the bottom here up to the top. Didn't quite come back all the way down to this line here. Went back up, touched the top, came back down to the bottom of the channel, and currently we're in this mid-range here, not quite at the top. So perhaps we could have a push up to the top of this line, which would be around 14,000, or perhaps we're just going to go in the mid-range and then come back down to the bottom of the line, quite like we did here, but in an inverted way. So the other lines I have drawn here, I've got these red dotted lines. It's just showing the previous tops, looking back on the chart. So if we do draw this line all the way across, we can see this initial run up here. We did top out at the top of this red dotted line, and then we did come back down before going higher again. And the second red dotted line was the top back here, and also we did top out here on the second run up before we came back down again. So just extrapolating and just looking at another top here, which is at 13.7. Perhaps we could come up to this red line and top out here before coming back down to this trend line. Now these yellow lines here, they indicate the tops here of these run-ups. We do have one fake out and then we came back down. So if we go all the way across, we can see it also caught the bottom of the second pullback down. So I've just done the same thing here with connecting the tops all the way across. We did have that same one fake out here. So if we do come up to this red line, perhaps we'll come back down and touch this yellow line in line with this trend line again, which would be back down to 12,150 before we bounce and go higher again. So just looking at that pattern here, I've just copied this pattern here from the previous run up. So if we were to put this in the same spot here and repeat the same thing, of course nothing is exact, but these patterns are quite similar, so that's what we have to go on, just looking at the past. So if we just zoom in here, perhaps this is something that's going to play out. So perhaps we'll get this run up, we'll top out here, maybe go to 14.1, maybe all the way up to 14.5, we come back down to this yellow line before going higher. Or perhaps this could be a bit lower. Perhaps we will get resistance on that red line like I mentioned and have that fake out here, come back down to the yellow line and then travel along this line and get support. Of course we could make this a little bit smaller just to fit it in so it does bounce off this line, and perhaps something more like that will occur where we do top out, get the fake breakout, come back down, hit the yellow line before taking off again. So if we were to do this, the peak would be around the 10th of November, and then we would have the big drop towards the end of November, come back down, bottom out at 12.1, and then the next run up wouldn't start until around the start of next year in January, where we would start going higher again, perhaps test around this 16,000 level. Of course there's no guarantees. We could come up and break this trend line, or we could come down and break this trend line. But we are in this channel currently, so that's what we have to go on. So just looking at some fib retracements here. So this was the crash back here in March, and we had this big run up. So just doing it from the bottom here after the peak, all the way up to the top. We can see we had a pullback. This is the 61.8, this is the golden pocket zone. We did pull back to here. We dipped a little bit lower, in between the 786 and the 65 level, but the bodies did close above the 61.8 and got support, and then we did go higher. So just looking at the next run up after the peak here, the lowest point here, and just doing the fib from here to the top here. So perhaps if we do have a similar pullback, we do come back to the 61.8, that would be around 11,130. And if we wick down again, it would be maybe around 10.8. But there's no guarantees. Perhaps we could just come to the 382 level at 12,000 or the 0.5 level at 11.5. But if this similar pattern does play out, then perhaps we will come back all the way down to this 11.1 zone. So I do just want to compare that to the previous bull market and the previous bull market pullbacks, because I think it's interesting to see where we did pull back to after run-ups. So this was the peak back in 2013, bear market, and then we started rising. So just take it from this point down here. So after the peak here, we did have a big pullback. So take the fib from the bottom here all the way up to the top, and we had this big run up. And where did we crash down to? Exactly on the 61.8 level here. So that was the first big run up. That took us to $780, and the all-time high was around the $1,200. And that drop from 780 came all the way down to 480. So that was a decent drop of about $300. So just looking at the next one, taking it, here was the peak, we came down, so we take the fib from the bottom here to the top here, and that's just a little bit off. And then we came back down. Where did we come back down to? Exactly on this green line, the 61.8 retracement, same as the previous time here. So we go to the next one, went to this peak here, the first drop, lowest point, we take the fib all the way up to the top, and we had that run up. Now we had the pullback. We did go a bit further this time. We passed the 61.8 and we came close to the 786 level. So this one was a bigger drop all the way down from 13.2 down to 888, and then we carried on higher. So that run up there was the one that pretty much took us above the all-time high, and then we came back down below it. So just onto the next one. This one was quite a big run up. It took us all the way from $880 to $3,000. And where did we pull back this time? We pulled back past the 0.5 level. We didn't quite come to the 0.618 level. So very bullish, very big run up and a small pullback. And then we did bounce and we went back up. The body of the candle pretty much was at the 0.5 level. So just looking at the next one, where we ran up from 1800 all the way up to 5000, so quite a massive run up. And where did we pull back to? We pulled back to this golden pocket zone again, between the 0.618 and the 0.65 level, and then we took off again. One more time, had this run up. Here's the peak. It's just a little bit off there. And where did we pull back to? We didn't quite get to the 0.5 level, so a very small pullback here before taking off again. And finally, we ran up from here all the way up to the peak here, and the pullback came to the 61.8 level in this golden pocket exactly. We had a decent bounce, and then we did come back down further, and this bounce didn't carry on, and this was the end of the bull market. And we see here we came back down close to the 786, and then we carried on down all the way down, and we broke this one, came all the way down from 20,000 to 6,000. So just trying to pick the top of the market, we can see perhaps that if we do have a short pullback like this, not even getting to the 0.5, perhaps we are getting close to the bull market. And also if we are sort of doubling the price in a number of weeks, then we are getting close to the end of the bull market based on this current cycle. So we can see here we basically went from 10,000 to 20,000 in this 2-week period. So it could be an indication that when the price doubles in 2 weeks, it's time to get out, because that's the top. So it's just interesting to compare that to the current run where we did have this 61.8 pullback. And now currently we've had this run up and we're looking for a similar pullback. Okay, so I just want to show you where you can long the market in bull markets after pullbacks. How you can know it's not going to pull back any further and where you should place your long. So this is just the previous cycle. We peaked in 2013, came down in this bear market. So I'll just replay it on the bars, and I've just got the RSI pulled up here, and I've got this line drawn here at the 53 level. So just watch this line and watch these arrows. So here we had our first big run up, and we started coming back up. It's the end of the bear market. So just wait for it to come to this line and then long it. So here we've touched the line, so you would long it at this position, and then obviously you take profits along the way. Ignore that arrow there because we didn't quite come down. And then we had this big run up again, so take profits along the way, wait for it to touch the line. There we touch the line, long it in this position, and you can see we haven't come back there. Take profits along the way, so you would have longed at 550 all the way up here to close to 1000, so that's a 2x, and we still haven't come down. So you would have longed it now as we touch that line on the weekly RSI. So we would have longed it here at around 850. Now we're at 2400. So it's a 3x gain. We touch the line again here. You would have longed it in this position around 2000. Now we're at 6000 and 8000. So that's a 4x, 10,000. So you could have longed it all the way here from 2,000 to 20,000 for a 10x gain. Now we've broken this line, so that's the end of the bull market. You could possibly get out here if you still had positions or you still had Bitcoin. And that's how I would play it. I would definitely use this line here, this 54 level, for a bounce position, because it did hold true all these times and it picked the bottoms exactly. Here we did go slightly lower, maybe to 52, but it's been pretty spot on. You can see just entering the bear market here again. So that's what I'll be trying to do now that we've started this bear market and we've had quite a big run up. We're looking for pullbacks, looking for long positions. So let's just have a look now. Of course, we were traveling quite well here. We had this run up back in June of last year where we bottomed out at 3.3, came all the way up to 14,000, and then obviously we went too hard too early. We needed a correction. So I've just got these other arrows drawn here now. So we've broken back above this line, so we could be thinking this is the start of the bull market, and then we had the stock market crash. So we didn't get the bounce here. And now we've recovered quite quickly. Now we have got to bounce off this line, the first bounce, and there's the second bounce, so you could long it here. So you would have longed it around 8.5, and then that's the second time you would have longed here, obviously taking profits along the way, not waiting for it to come back down. So this would have been your second long position on this line. You would have longed it at 9.9, and now we're up at 13. So we are looking for another big pullback down to this line, and we'll be looking to get into a long when we do come back to this line. So that's how I'm going to play this bull market over the next year. And another indicator you can use, of course, is the 20 weekly moving average. And we can see we did come back to touch this line quite often, and we did bounce off it. We had small breaks below, a little wick below here, but it was pretty reliable for the bottom of the market. Whenever we went up too high, we would pull back to this 20-week EMA. We can see it corresponds with this line, so we can use them in conjunction to find positions where we can go long in the bull market. So just currently we can see we did have a pullback here, and we did get a bounce off of it, and it did pretty much correspond with this line, was slightly above, not exact. So now we are quite a far away from it. It's at 10.6 currently, so we might go sideways for a bit here and then pull back to the line, maybe at 11.1 or something, and then we'll also look for longing it when we do come back here and touch this line again. Currently just looking at the run up we've had here all the way since 8th of October, and just looking at the 4-hour EMA ribbon. So I'm expecting a pullback at least to the touch of this ribbon in the short term around 12.6 and getting a bounce there. And just drawing the EMAs here all the way from the bottom here after this big pullback to the top, if this is the top and we don't go higher. If we do have that big pullback here to the golden pocket zone and the 61.8, this is inverted, so it says 38.2, that would take us down to this 11,120 range. So that's a possibility. Or perhaps we might only come back to the 38.2 level before taking out this high again at 11.9. But looking on the past in the bull market runs, you can see we did quite often come back to this 61.8 level and sometimes a bit further. So that is a possibility. Just looking where the daily EMA ribbon is here, it's coming in around 11.7 at the moment. So after the weekend, perhaps this will be around this 38.2 level, and we might get a pullback here to the 11.9 and bounce off this ribbon. But if we are going to have a big pullback, then this is on the weekly chart. We can see it started taking off a bit, this EMA ribbon. And starting next week, perhaps we'll be around here, the 61.8 level with the ribbon, and perhaps we'll come down and touch the weekly ribbon. Just like we did back here after this run up, we touched the ribbon before we took off again. So it's always a possibility. We come back to this 11.1 level with the 61.8 retracement. So currently we are going sideways here, just after this peak here at 13.2. So we could be in this triangle pattern here, this symmetrical triangle, and perhaps it's even a bull flag, or perhaps we'll break down from it. Of course, if it is a bull flag, it has quite a long flagpole here, and the target would be all the way up at 14,900. But I do think we need a correction. We have come up quite a lot, and if we do get that 61.8 pullback here, perhaps we'll come down to this around 12,000 zone. So currently I am looking for a drop here to get into a long. I think just drawing the fib retracement from this point here, the 61.8 would be at 12.5. And just got these other lines drawn here, just connecting the bottoms. So if we do come back here, perhaps we might touch the bottom of this trend line. So I do have some lines a bit higher. I do have it at 12.6 also, in case we come back and touch this trend line and bounce back up. And I do also have this orange trend line here, which we broke above, got support, and then broke back down below it. So I do think we are going to come back down at least a little bit here. And if we do break this triangle down, we'll probably have a bigger pullback. This fib's just drawn from before the run up, just down here from 11.2 all the way up to the top. If we did have a pullback with this fib retracement, if we came to the 38.2 level, it would be around 12,460. If we came all the way back to 61.8, it would be around that 12,000 mark. So it's possible that we could bounce here and go a little bit higher before a big pullback, or it's possible that we do come and have that big pullback soonish. So thanks for watching. I hope you liked that analysis. And let's see how this plays out. Let's see if we do get this run up and come back to this trend line. And we'll just have to wait to see what happens. It could take a couple of weeks to unfold. So thanks for watching. See you next time. I'm Bitcoin Mamo. Bye.
The real revolution of Bitcoin is as a new kind of payment network, something like Visa or PayPal. Those conventional payment systems are owned and operated by for-profit companies. But Bitcoin isn't. There's no Bitcoin, the company. Instead, Bitcoin is run as a peer-to-peer network. Computers on the Bitcoin network process Bitcoin transactions by adding them to a shared public register. They call that the blockchain. All the computers keep it together. It's as if we were all keeping Visa's records up to date together as some kind of weird volunteer project. You're probably wondering, well, what's the point? Why not just pay for things with PayPal or MasterCard like a normal person? And it's a good question, but Bitcoin has one big advantage over conventional payment networks. It's an open platform. To become a MasterCard merchant, you have to apply for permission, pay a lot of fees to MasterCard, comply with hundreds of pages of regulation. Bitcoin is different. Anyone can use it. It's free, and there are no rules limiting what Bitcoin-based services can do. An open technology platform like this can become a hotbed of innovation. Think about the internet. People were as baffled by the internet in the 1980s as they are about Bitcoin today. The internet was unusable then. It seemed ridiculous that anybody would ever find anything useful to do on it. Eventually, that freedom allowed people to build great companies like Amazon and Google and Facebook. The buzzword here is permissionless innovation. You can do cool things without any central authority being able to tell you no. In the same way, Bitcoin can become a platform for building a new generation of financial services, like international money transfers that are faster and cheaper than Western Union, better security for everyday purchases, and perhaps new services that aren't even possible with conventional payment networks. We don't know what this stuff will be, but now that Bitcoin is here, we're going to find out.